This week on Inside Olympia, prices are rising by double digits for individual health insurance plans on the state's health benefit exchange, and federal subsidies are expiring. The double whammy could affect thousands of Washingtonians. How did we get here, and what are the solutions? On the program, State Insurance Commissioner Patty Kuderer and Health Benefit Exchange CEO Ingrid Ulrey. Welcome to Inside Olympia. It's open enrollment season, and for 300,000 or so Washingtonians who buy individual plans on the state's health benefit exchange, the news is grim and grimmer. Premiums are going up for next year by more than 20% on average, and federal subsidies to help offset the cost of coverage are set to expire at the end of the year unless Congress acts to renew them. A standoff over these subsidies has led to the longest government shutdown in history. How did we get here? What can the state do to help ease the pocketbook pain? Is there a longer-term solution to stabilize the individual insurance marketplace? In our second half, I'll be joined by Ingrid Ulrey, CEO of Washington's Health Benefit Exchange. But joining me first is State Insurance Commissioner Patty Kuderer. Welcome back to the program. Good to see you.
Thank you.
So let's start with the individual health plans and the cost that consumers are going to see. Your office approved rate increases averaging about 21%, and that's an average. Some will be higher, some will be lower. That was around what the companies were saying they needed, pretty in line with what the companies said they needed. Why did your office, in evaluating that proposed average rate increase, think that that was appropriate this year or for next year under the circumstances?
Well, Austin, under the statute, we are supposed to go through the applications, and if they're justified, if they are necessary in order to make sure that these companies remain solvent, we are required by statute to approve them. And they did justify it, and they looked at a lot of factors, pointed to a lot of factors as to why that was the case. And one of the factors that they pointed to was the uncertainty coming out of the other Washington. There are other things that are driving the increase in premiums, increased utilization overall. There is consolidation in the healthcare industry that's also increasing costs, and drug costs. That's also having an impact on the premiums. So these things in combination resulted in this increase. And as you said, it's a base increase, an average base increase. Some will see higher, some will see lower.
We should note that we've seen double-digit increases year over year in the past, but this is the largest increase since the exchange was created. And of course, it comes with this sort of double whammy of not only if you're buying insurance on the open market, your premiums are going to go up, but you're also, at this point, stand to lose the premium subsidies, the help you've been getting to bring down those costs. What does that double whammy start to look like for the 300,000+ people who are getting health insurance in this fashion?
Yeah, it means sticker shock for people, and it means for some people that they're not going to be able to afford health care, and they're going to forego it. Those will typically be your stronger, healthier people.
The numbers I've seen are the projections are something like 80,000
yes,
might just decide to drop or not renew.
That's what we think could happen. We have worked collaboratively with the Health Benefit Exchange, fabulous partner, I want to say, in terms of trying to lessen the impact of the harmful decisions being made by the other Washington, and we're hoping that that number won't be as high. We passed an emergency rule for premium alignment that we hope will allow some of those 80,000 people to remain in the marketplace. But, the reality is we have a dysfunctional federal government that is putting, tax cuts for billionaires over the priority of the health care of the American people. And to me, that is reckless. It's irresponsible, and it is one of the worst use of tax dollars that I can think of. Because when we use the enhanced premium tax credits, that program has been enormously successful, enormously. So why would you cut a program that has actually worked as intended, has actually brought more people into the marketplace, which has an overall effect of helping to stabilize premiums because now you have more people who are insured, right? And you have people who now have an ability to access preventative care in the first place, as opposed to using the emergency room for their primary health care, which is the most expensive form of health care. And we pay for that. So this is really a reckless decision by Congress. And of course, the leadership out of the White House has been very, adamant that they just open the government without this. And I think that, Congress, if they're going to reopen the government, this is a good reason for them to be holding out. Because we're talking about the health care, not just for the 80,000 people here in the state of Washington, we're talking about millions of people across the country.
We'll get back to the health plans and the costs in a moment, but let's stick with subsidies. I will note that we are pre-taping this interview, and a lot can change.
Very true.
Day to day, although this shutdown, as we speak, is now the longest, and there's no sign of it ending. The opponents in Congress, Republicans who oppose extending these subsidies, in fact, the House Republican Study Committee put out a statement recently that said, "We are also committed to delivering a healthcare system that is truly accessible, affordable, and spurs innovation. Congress should reject any extension of the wasteful COVID-era subsidies that fuel fraud and drive up costs." They say this was a temporary program around the COVID era. It shouldn't be renewed. It's not the answer to stabilizing the health insurance marketplace. What's your response to that?
Well, they don't know what they're talking about. I mean, this has been an enormously successful program, first and foremost, and of course they're going to say that. They've been talking about their plan for healthcare for how many decades? They don't have any ideas. They don't have anything concrete. They have a concept of an idea. Remember that? I mean, if they actually had a plan for healthcare, we would have seen it a long time ago. They don't. They're void of any ideas. This program has enabled people who could not afford health care to access health care for the first time. And I'm talking about people who are young and, maybe college-age students, retirees who are not quite Medicare age, right? And small business owners, people like that who don't have access to health care through another employer, right? And it seems to me that when a program works, and there's data to support that the program works, and there is. We have years of data now that show that this has been very good for the healthcare system overall. We should continue that program. And let me just say this too, Austin. The fact that the National Association of Insurance Commissioners, which is comprised of all 50 states and the U.S. territories, were unanimous in their request to Congress to extend these enhanced premium tax credits, that should tell you that this is not a partisan issue. This is a healthcare issue. And at the very least, we should be focused on making sure that people in this country have access to affordable health care.
Let me throw one other criticism about these subsidies at you that we hear from fiscal policy and free market kind of think tanks and circles. They argue that the premium tax credits, while effective in lowering consumer costs, I don't think anybody's arguing with that, were never intended to be permanent and are now distorting both prices and federal spending. What about that line of argument?
Well, again, I mean, it was a temporary program, but, it's like a pilot program. You look to see at the data. Why would you disregard the fact that it's been enormously successful? I think the real issue here is that this is part of a health care program that is known as Obamacare. If this was Trump care, do you really think we'd be having this discussion? I don't. And the reality is this is about somebody's ego, not about what's good for the American people. And for me, I look at data, all right? I'm data-driven. And the data is telling me that we need to have these extended premium tax credits because they help people stay on health care, and that's a good thing. It's a good thing for those people. It's a good thing for our communities, and it's a good thing for our economy. And again, I go back to the fact that when you invest in people's health care, you actually save taxpayer dollars. And so that's really what Congress should be focused on, not tax breaks for billionaires who, by the way, are not concerned at all about where their health care is going to be coming from or where they're going to, whether they're going to be able to put food on the table for people. They're not concerned about that, but yet that was something that Congress decided was a priority for them, to give billionaires another tax break. The priorities are upside down with this administration.
Well, let's toggle back now to the health plans. Again, 21% average approved rate increases for this year compared to last year. It was about 11%.
Yep.
So this is a doubling of that. As you noted, this is sticker shock for people as they go to the health benefit exchange and start to shop for next year. How would you, at this point, evaluate or grade the health of our individual insurance marketplace? Over the years, we've heard a lot about there aren't enough carriers. There aren't enough carriers willing to serve all 39 counties so that we have some competition there. That they're very susceptible to these, higher cost areas where then that puts pressure on the system, downward pressure. What would you say just generally about how wobbly or how secure right now this individual health marketplace is? Well,
it's not perfect, but we did add another insurer this year, so we're up to 14.
So didn't lose any and gained one?
Yes.
And that I think is serving in a couple of counties.
Yes. But, there is no healthcare system in the country that doesn't have some challenges. So, my office, we're committed to working on those with the agencies that also work in this space, to do what we can to make sure that counties do have more than one choice. We don't want any bare counties in the state. We did pass the public option here when I was in the legislature. That was part of the reason for that, is that we didn't want to see bare counties. So, there's more work to do. I mean, if I had my way, we would move to universal health care, plain and simple, because as I have said before, I do believe that health care is a human right. And again, if you're just a numbers person, it makes sense to make sure that people have access to health care because it actually saves us money. People aren't then using the emergency rooms. They're not missing work because of a preventable illness. We can do better. And when I watch this federal administration that seems, bent on breaking things, and let me just say this, Austin, it doesn't take any special talent or intelligence or skill to break things. It takes, courage and vision and motivation to rebuild. And I think this is going to be an opportunity for us to rebuild the healthcare system better. And there's already conversations like that happening amongst some of us.
Well, I think anybody would say a system that relies on subsidies to offset costs, and especially subsidies that are not permanent in nature, is not an ideal or optimal system. So to the extent that maybe this crisis is forcing conversations, what does that start to look like here in Washington State? You've just stated, and you've said it before, you support universal health care. Are there conversations getting going with legislators right now around this? Obviously, that would be costly. The state's in a budget crunch. Mm-hmm. But help telegraph where this might be headed, at least for our state.
Well, you know that we created the Universal Health Care Commission. That was not just a feel-good vote for me. That was something that I felt very committed to. And we put the insurance commissioner on that commission. At one of our most recent meetings, we had a presentation on the 1333 waivers, CMS 1333 waivers, which allow for interstate compacts. And so what we're starting to talk about, we had invited Oregon to this meeting too, because they're also working on how to access universal health care for Oregonians. So we're looking at, how can our states work collaboratively on making sure that people have access to health care? And it's not just, having a health plan. I mean, we also want to make sure that people have access to preventative care, right? Vaccines, mammograms, things like that. Again, the best bang for the buck is going to be in prevention so that we can avoid health problems down the road.
So to be clear, I mean, are you hinting at the idea that there might be like a regional single-payer system that could be stood up involving West Coast states, for instance, Washington, Oregon, California?
Well, it could happen. I mean, I'm open to all potential solutions, and I'm kind of agnostic on how we get there. I just know we need to be able to make sure that people have access to health care. And I mean all people have access to health care.
Do you see anything that could or might be done in the upcoming legislative session, which is a supplemental year, and again, with very, they're going to be cutting, not adding at this point to the budget. What do you have specific proposals? Are there conversations you're having with legislators about, whether the state could step in? Let's say the subsidies don't get renewed at the federal level. Can the state step in? Or could the state take a step toward a universal system in 2026?
Well, I think what the state's going to be focused on is how do we reduce costs overall in healthcare for next year. The conversations, like I said, it was a recent meeting with the Universal Healthcare Commission, and I think right now there are bills in the legislature. For example, Senator Robinson has a bill pertaining to the corporate ownership in healthcare, corporate practice of medicine. I think that you're going to see that bill come back. There was the Keep Our Care Act, which dealt with the consolidation issue, and I think that's going to have to be looked at more closely. The healthcare industry is exempt from federal antitrust laws, but not state antitrust laws. Is that an avenue? I think those are things that need to be discussed, and I'm sure the legislature is going to be looking at the best ways to reduce costs overall as we move toward a universal system.
In terms of, I know that there's a lot, as you noted, consolidation happening in healthcare. Private equity is very much involved. In this state today, if a private equity firm wants to come in and purchase a healthcare system, for instance, does that require state sign-off?
I don't know the answer to that, to be honest.
Do you think it should?
Yeah. Well, should it have? I
Should
think
the
I think
state
I think
have
we
to
should
say-
know about it. I definitely
So
think
notification.
I think we should know about it. Yes, because I think private equity has a different. It has different goals, I think, than, say, for example, a not-for-profit healthcare system. Right, a not-for-profit healthcare plan. I think they have different goals than private equity has, and I'd like to see more data on that, but I'm not so sure that is a good idea to have private equity own healthcare pieces of healthcare, and I think there are some conversations going on in legislatures around the country about that issue.
Going back to the cost piece, what more do you think the state could do to bring down, say, the cost of prescription drugs, which you said are a key cost driver? Hospital stays, which are more and more expensive. Are there things that this individual state can do to move the market? Or are we really only going to be able to do that at scale in combination with, the region, for instance?
Well, I think it's both, really. I think you can do things at the state level, and I think there are things that should be done at the federal level. I mean, think about the fact that Medicare was not allowed to bargain, negotiate drug prices for the longest time, and now it's just a certain number of them that they get to negotiate. What took them so long to get to that point? We do have a very expensive healthcare system. It's the most expensive in the world, and it's the only for-profit system. And I really think we need to be looking at having a for-profit system, and if that is consistent with patient care. I don't know that, I'm not a fan of the for-profit system. I don't think it's good for patients, and I don't think it's good for providers.
What about the public option? How is that working? Who has access to it?
Well, it's working through the HCA.
And it's still, to be clear, that's still run by a private healthcare company. It's contracted.
To Molina. Yeah. And,
Has it been a game changer from your perspective?
I think so. I really do. I think Cascade Care has been quite a game changer. And like I said, it makes sure that we don't have any bare counties. I think that's really critical.
Am I correct in understanding that there is a cap, though, on participation in it, or at least on the subsidies piece on the Cascade side? Maybe a question for Ingrid when she's on.
Yeah, that'd be a better question for her.
Let me go back to these these rate increases, some of them are, really eye-popping. 38% for United Healthcare of Oregon, which I guess serves Washingtonians. 28% for Molina. 27% for coordinated care. There are some who are, much below the 21%, 11%, for instance, for Kaiser. Why such variation? Why are we seeing in some cases, an 11% increase for a particular plan, in other cases, a 38% increase?
Well, that's a question for the healthcare plans and for my actuaries, actually.
Mm-hmm.
I don't see the applications nor would I even understand, the actuarial side of this. But our actuaries go through those applications very, very closely, and they make sure that the plans justify the increases that they're asking for. So there's a lot of dialogue and back and forth that happens when they file these rate increases. And, our goal overall, we are a consumer protection agency that's our core mission. And our goal is to make sure that whatever the rates are that are ultimately put into place, that they are justified. So the consumer knows that there's a reason that these rates are going up. It's not just, that you've got a greedy company here. That's not what we're talking about. These rates are going up because of the factors I mentioned earlier.
What are you hearing from the companies? I know you're not a fan of this for-profit model.
No, I'm not.
But when you talk to them, and they're probably not thrilled with this status quo either. They don't want to be raising their rates to this extent. It's probably not good for business, especially if they lose customers.
The ones I've talked to would like to see the enhanced premium tax credits extended. So
there's
again,
unanimity there.
Well, based on the ones that I've talked to, yes. And I think that they understand that when more people have access to health care, you have a wider pool that's being insured, and that has a stabilizing effect overall.
So to be clear, if Congress were to renew those subsidies, would the approved 21% on average increase in premiums hold? Or is there sort of a plan B where if the subsidies come back online, then the companies can only raise an average of a lesser percent?
Yeah, so back in March, we worked with the HBE and we requested...
That's the benefit exchange.
Yes, and we asked the companies to submit 2 sets of rates for us to review and approve. We did one assuming that the enhanced premium tax credits would be extended as is, and one without. And so we're ready to hit the ground running if Congress, acts, which they should. But we're running out of time. We've already entered open enrollment,
Yep.
and people are looking, and there's sticker shock, and there are some people who are going to say, "I just can't afford this, and I'm gonna risk it."
But if the subsidies came back, when we talk about the 21%, that's the increase assuming the subsidies are not renewed. If
Correct.
they are renewed, what does the average plan increase then drop to?
It would drop about 7%.
So maybe around 13, 14%
Correct.
instead of 20,
And
21%.
quite honestly, Austin, that 7% means the difference between some people being able to afford health care and some not. And that can mean the difference between life and death. So this is really critical that Congress do its job and stop playing politics with people's health care and pass those those enhanced premium tax credits. And like I said, I don't care that it was a quote-unquote temporary program. The data tells us that it's working. Why would you discontinue a program that's working? They should continue this because it has increased access to health care.
What kinds of conversations are you and your colleagues, fellow insurance commissioners around the country, having with members of Congress? What kinds of conversations are you having with our delegation?
Many. We are talking with them about the need to extend them. We give them the data. If they ask for specific data for their county or their congressional districts, we'll give them that. We have been at the forefront of calling for the enhanced premium tax credits to be made permanent. And like I said, the National Association of Insurance Commissioners is made up of red and blue. And this is an issue we are united on. And I think that is a very powerful message for Congress to listen to.
Couple last questions here. There are patient and consumer advocates who feel like regulators like you should be pushing back even harder on these insurance companies. I realize that you said that the evaluation that goes on is an actuarial one, but there are those advocating for more aggressive cost containment rather than passing through to consumers, these higher costs. What would you say to those consumer advocates who are saying, just drive a harder bargain with these companies?
Well, we make sure that whatever justification that the companies have, that it's real. We make sure that it's based on what they're allowed to raise rates on. So there's that. We are the watchdog there. In terms of cost containment, a lot of that would be in the legislative purview, but we stand ready and willing to work with any legislator on helping to curtail healthcare costs. The reality is, if I were just to say, you know what, I know that 21% is justified, but I don't care, you're only going to get 10%, then what the risk we run is that companies just say, you know what, not going to play ball here, and they're going to leave. So then we're going to have more bear counties, right? Or they're going to run the risk of not having enough money to cover claims. That's not a good situation either. So this is a balancing act when you're doing regulation, but you can take it to the bank that we are always going to come down on the side of consumer protection whenever we are given that opportunity.
One last question. You mentioned the emergency rule at the beginning. Why don't you explain that to us? You invoked an emergency rule on the silver level CSR load adjustment factor. What does that mean?
I mean, we aligned the premiums so that we could make healthcare more accessible for some folks. So I know it is sticker shock. We want people, though, to go onto the marketplace, and this is traditionally for folks at the 400% of federal poverty level and below, that they might be able to find a plan that they can afford and give them the coverage that they need. So I know these are tough times, and I wish it were different, and I wish we had more effective leadership out of the other Washington and not this dysfunction and chaos that we're seeing. But I do want people to at least give the health plan finder a try to see if there's something that is there for them.
Okay, we'll stop it there. State Insurance Commissioner Patty Kuderer, thanks for the conversation. Appreciate you coming in.
Thank you.
And when we return, what is Washington's Health Benefit Exchange telling customers about their options during this year's open enrollment period? The exchange's CEO will join me when we return. Back after this.
Watch all of TVW's award-winning shows on your time at tvw.org.
Welcome back to Inside Olympia. Our focus this week is on rising health insurance costs and the expiration of federal subsidies to offset rate hikes. Joining me now is Ingrid Ulrey, CEO of Washington's Health Benefit Exchange, which is where about 300,000 Washingtonians go to buy individual health insurance. Good to see you. Thanks for being here.
Austin, thanks for having me.
So we are in the open enrollment zone. We usually talk at this time of year, and it's often an exciting time because you're talking about the offerings and the mix and kind of what people will see and experience. But this year there's sort of this cloud over open enrollment because these federal subsidies are expiring, have not been renewed by Congress, and at the same time we're seeing insurance rates go up significantly, historic rate increases. So just as a scene setter here, what's the mood? What's the tenor? As you start this open enrollment month, what's the messaging out to the public? What are you seeing and hearing?
Well, thanks, Austin. We're seeing a lot of signs that people are really worried about the major federal policy changes and what that might mean for their pocketbook, right? If they're going to be able to afford coverage in 2026. So signs of that are the volume, just the sheer volume. In these early days of open enrollment, we've had on average 30,000 people a day coming into our platform, Washington Health Plan Finder, to see what's available for them for next year and to pick a plan and make some hard choices or some easy choices. It depends. We've also seen much higher than predicted call volume, people dialing in for support from our customer support center. And we're glad people are calling in because it is a more confusing year than ever. And the impacts, this is the important, probably if there's one headline message that we want Washingtonians to understand is the impacts of these federal changes that they're reading about in the paper, they really vary broadly across our market, and customers will be impacted differently, primarily based on their income and their age. And not to get too discouraged, to come in, see what's available. They might actually be surprised what they will find. And we're here to help. So in our customer support center, we have the ability to help people and serve people across more than 200 languages. And we can also connect them with an in-person assister, navigator, or broker. Because health insurance, it's expensive, it's complicated. People often need support and help, and we're here for that.
The average subsidy, if I remember correctly, is about $1,300. Is that right? The federal subsidy?
That is the average value of how much the subsidy will go down, or the tax credit, assuming that it is allowed to expire by Congress.
So what somebody was on average kind of benefiting to the tune of $1,300 to offset their premiums, and is that annual, every 6 months?
That would the
month?
average loss for Washingtonians, assuming the tax credits do expire, would be on average $1,300 for people who are eligible for the tax credit, and for older people it's much higher.
It's like closer to $2,000.
Exactly.
And that's per month.
That's per year.
Per year.
That is the annual value.
Okay. So what?
But those are all averages. So again, individual circumstances vary broadly.
Well, as you sort of look at this and think about what the actual, when people go in and this, let's presume the subsidies expire, is there any way for people to go into this portal and find a plan that they won't be seeing, okay, I'm now paying 20% more than I was last year and I just lost the subsidy, so I'm now getting this double whammy? Is there any way to navigate this to at least lessen the impact?
So the short answer is yes. So we don't know, if Congress will take action to extend the tax credit, if so, when they might do that, or then what outcome we might see in terms of what the continued policy is. So our market is set right now, assuming current law, that these go away. So people can come in to WashingtonHealthPlanFinder.org, and they can use the browse function if they just want to quickly look and get a sense of things. It's very easy. Or they can open and establish an account or go into their current account, and they can see what plans are they eligible for in their county, and a lot of information about those plans in terms of the premium, the deductible, the out-of-pocket costs, et cetera. And our system's set up so there's a function called Smart Plan Finder, which people can choose, which will put the highest value plan for them at the top of their basket.
So what would be the scenario whereby you wouldn't be facing a 20% increase in what you paid this year compared to what you paid this year, and the loss of, say, $1,300 a year in subsidy?
So let me do this. Let me explain first who's likely to be sticker shocked, if you will, who's hardest hit, and then I'll explain for whom they might be surprised that it actually they might see relief and they might be able to basically buy at the same rate they did last year. So the people who will feel this the hardest and who we're really hearing from the most include folks, about 26,000 of our customers who in this year, 2025, are currently eligible for the enhanced federal premium tax credit, for short, the ACA tax credits, who due to the change in the structure of that and it being discontinued, will no longer be eligible in 2026. They'll lose access to tax credits altogether. So not just the base level that's been around since the beginning of the ACA, but any tax credit, federal tax credit support at all. So those are the folks that we're hearing about that are experiencing, on average, a doubling of their rates, and many of them more like a tripling or even more. So I think the easiest way for people to think about this is, what is the net monthly premium I'm going to have to pay? I'm going to give you an example that's from our data, but it's very illustrative of a lot of cases that we see. So think of a family of three. So parents in their early 60s, so a bit older but not yet eligible for Medicare, still supporting a dependent, maybe an early 21-year-old in this example. Their current, and they've been purchasing a bronze plan, a lower cost plan, and these folks might be running a small business. They have a limited income. They're just above the cap, the new income cap. Last year for 2025, their premium would be $660 a month. So really quite expensive even last year. This year, because they are completely losing access to federal tax credits, they're going to see a $2,500 per month premium, which is, $30,000 a year to pay for health insurance. And what's so hard, so people in this segment of our market are really having to make tough choices and really thinking, how are we going to change things up? Does one of us need to go back to work? What other essential costs can we forego? Or do we have to think about either the entire family or some members of this family just going without,
not being insured,
and dropping?
So why are they losing both the COVID era help as well as the
So the
longstanding ACA?
enhancement did two things. So one is it changed the eligibility for federal tax credits to be simply anyone who we can see is paying more than 8.5% of their overall income, spending more than 8.5% on health insurance, is eligible for federal tax credit on a sliding scale. And it also increased the level of help available to everyone who is eligible. So the enhancement did those two things. When it goes away, people above the income cap, which is at a modest income, it's $63,000 a year for an individual, they will suddenly not be eligible for any tax credits. And those who are still eligible will continue to get tax credits, but at a lower value, as we talked about a minute ago.
And just to be clear, the tax credits are different from the COVID era subsidies that are expiring.
They are the same things. So some people are calling it subsidies. It's technically is a tax credit.
And that's what goes away.
Yes, the
So-
ACA tax credit.
Got it.
So let me just clarify. There's the base ACA, the tax credit that's been around since the beginning of the ACA.
Yeah.
During COVID times, it was enhanced. It's the enhancement that expires.
Got it. So what percentage of the 300 or so thousand people who are buying their health insurance on the exchange or on the individual market are qualifying for these subsidies?
Yeah, so currently in this year, 220,000 out of approximately 300,000 are eligible for the tax credit and are benefiting from it.
So when that goes away,
When that goes away, 26,000 we see next year will lose it altogether. Others will get less from the tax credit. And I do want to point out.
and just to be clear,
yeah.
again to go back, is this the underlying tax credit eligibility is changed because of HR 1? Is that right? The bill in Congress?
No.
No.
No, that's okay. But I was going to mention HR 1.
Okay.
Yeah.
I mean, this is very convoluted.
It's complicated. It is. And I try to keep it as simple as possible. Tax credits have existed since the beginning of the
Right.
ACA. They've been enhanced. That's had a powerful impact of creating record high enrollment in Affordable Care Act plans across the country and here in Washington State. So it's very effective policy to reduce the rate of the uninsured and get more people covered. When that expires, fewer people will get tax credits, and those who continue to get them will get a lower value of support and help.
So I'm still confused about that. I understand that the add-on, the COVID era add-on goes away. But
Right.
if the baseline tax credits are still in place,
Mm-hmm.
do those change at all?
Yes.
Why?
They are reduced in the value that individuals will receive. It's a sliding scale.
And,
So-
and why is that? Why aren't you
So
just
they-
getting the bump, but you're still getting the baseline, I guess is the question.
That's Congress's decision. So they decided they enhanced and invested more in tax credits to get people covered
Okay.
by increasing who's eligible and increasing the overall value of those credits. That is what's going away.
So let's go back to you kind of gave us a worst case scenario. What about people sort of in the middle
Sure.
who might
Let me-
be able to
actually,
sneak
let me-
through this and be on? Okay.
Yeah. I think it's important just to also note that some of the very lowest income individuals who purchase and shop on our market are also in the worst case scenario. So I don't want to leave them out, and I want to mention that. So this is due to HR 1, the so-called One Big Beautiful Bill.
Yeah.
So in that bill, it restricts the definition of lawfully present immigrants. So 10,000 Washingtonians who are extremely low income, who earn below 100% of the federal poverty level, will lose access altogether to any tax credits. So they can still shop on our market, but we can see from our data, Many of them will drop.
So they're lawfully present in the country, but they're non-citizens, so they will no longer qualify under the changes made under H.R. 1.
Correct. And that's across many programs in that bill that this population has been impacted. So in this case, they will lose, and these are refugees, asylees, other protected classes of individuals who are following the rules in our country legally and will lose access. So this is going to put huge pressure on like the community health centers, on hospital emergency rooms, because from our data, we see the exponential increase in prices for them will make it untenable. And
They'll drop.
Yeah.
And what's the number again?
10,000.
And do you have a sense of what percent, is there a projection of what percentage of the 10,000 might drop?
We don't have that, but the percentage increase is nearly 2,000% increase. People are paying an average of $25 per month in this category because they're so low income, and their rates would increase to more like $500 a month. And for when you're living on maybe $15,000 a year,
Not going to be able to keep doing
yeah.
it.
So those are the people hardest hit. But I
So that's
know
sort
that
of
you want to know
that's
about.
kind of two ends of the
Yeah.
the spectrum here. So what about the folks in the middle?
In the middle, it's a bit mixed. But what I would say is, I think you used the word grim earlier in your interview with the insurance commissioner. There's really hard news and really great difficulty that's being thrown at us. And what I am really, really proud of is for Washingtonians is that we have a commitment in our state to the basic notion that everyone should have the right to access to health care and health care coverage. So major actions, including the one that we're grateful to our insurance commissioner, Patty Kuderer, for, are making a really huge difference for people in the middle range of our market. So the emergency rule to establish what is called silver loading or premium alignment will make a large difference for many of our customers and will offset, for many of them, all the loss that they would feel, at least for this year only, if assuming Congress does not extend the enhanced premium tax credit.
So how does that work?
It's a little complicated, so I'm going to give you the easiest explanation I can possibly think of. So essentially, it is a direction from the emergency rule of the insurance commissioner to to ask all the carriers to load up the rates at the silver metal level.
Because you have bronze, silver, and gold?
Correct. So what that does.
So like put the higher rates into the silver level and try to leave the bronze and the gold as untouched as possible?
Correct. So by doing that, it sets the benchmark plan.
Because the silver is the benchmark.
The second lowest cost silver is what is the benchmark for how we calculate how much overall federal funding will come to our state and benefit Washingtonians with the enhanced premium with the premium tax credits.
Yeah, not the enhanced,
Not
which
the
is going away,
enhanced.
but
You caught that. Good. Thank you.
but the
Yes.
underlying
Yeah.
original ones. Yeah.
So it's huge, Austin, because that means that it lifts all boats and ensures that all the Washingtonians who continue to be eligible for the tax credit, even if it's not at the enhanced level, will get more, at least this year.
Can you give us a kind of scenario under that situation?
Yes. So we can see that people in our market who are, not above the income cap, but not the very lowest, some of them it will depend on their situation and their healthcare cost utilization. But for others, we can see that they should be able to choose a plan that's the same or slightly higher or slightly lower costs that they paid in 2026. So that's a big deal.
And they'll basically be getting a higher level of subsidy, base subsidy,
Right.
which can offset the loss of the enhanced subsidy.
You got it.
Okay.
And the other.
And that's
yeah.
legal?
It
This
is.
isn't funny business?
No, it is not. It is perfectly legal under current law. A number of states are and have been doing this. What we don't know is that if we would be able to continue doing this going forward.
If that's the case, though, why is this necessarily such a kind of hair on fire moment?
There is real hair on fire for a couple of reasons. One is the people I already talked to you about.
Yeah.
So overall, we're concerned at about 40,000 people in our market could drop. So the prediction by our actuaries when we saw the federal changes coming were that rates would increase so much that, as Commissioner noted, 80,000 Washingtonians would see price hikes so high that they would drop.
Yeah,
Now,
I did see that number originally, too.
Yeah. So due to this intervention And layered on top of that, our state premium assistance program called Cascade Care Savings. This will provide enough of a protective coating to support people at least in plan year 2026, such that we predict only half of those 80,000 might drop. So it's still a huge tragedy that we'll be losing tens of thousands of people who may drop their coverage, but it's a huge win and reflective of the power of our state authorities and support from our governor, our legislature, and our overall authorizing environment to say, the other Washington may be doing this, but we're going to do whatever we can in this Washington to keep people covered.
I want to get to Cascade Care, but just briefly, someone might be thinking, well, okay, we're losing these federal enhanced subsidies. Why doesn't the state legislature just jump in and replace them? Now, I know that the state is facing a budget crisis, but even if times were good, what would that cost?
What we know is the total economic value of the enhanced federal tax credit that's come this year is $285 million. So in the current state fiscal environment, that would be very difficult to backfill when and if and when it goes away. We are grateful to the legislature for funding Cascade Care Savings, which is more of the equivalent of $55 million per year in the current year and for 2026. But we know that it is a stretch in our current fiscal environment. It's a huge cost shift from the federal government to the state government.
So nobody's talking about the state stepping in January and backfilling this.
The important thing is that we continue at least the base level funding and keep up with the growth and demand for Cascade Care Savings state premium assistance. And that is the ask that we've made to the legislature and to the governor.
And that money is in place for 2026, not for 2027.
That's correct.
And that will be the supplemental request in January, is to continue it into 20. Yeah. So how does the Cascade Care plan and the state premium assistance work, and who's eligible for that?
So the state premium assistance is available to our lower income customers. We're talking about 250% of the federal poverty level.
And do you know what that
that's
translates
at approximately $40,000 for an individual per year. So pretty low income, trying to live on that in Washington State.
So anybody can buy the Cascade, the public option plan, but not necessarily get the premium assistance.
The Cascade Care Savings is state premium assistance. We use that term Cascade Care a lot at the exchange. Yeah. Cascade Care Select are the public option plans. So those are two separate but complementary policies.
How many people are getting the state subsidies?
100,000.
100,000. They will be kind of held harmless, it sounds like, if they stay with Cascade Care and they're qualify for those state premium assistance.
It depends. It's really hard to make generalizations because a lot of this is based on income and age rating, so income, age, and family size. It will certainly provides that extra layer of protection for people below that income level, and will offset price increases they may face when the federal tax credit declines in value.
Is Cascade Care as an option on the health benefit exchange cheaper than the other plans?
So there's three Cascade Care tools that we're using to drive affordability. So one is what we just talked about, state premium assistance.
Which only a subset of people are going to qualify for.
Correct.
Because what I'm thinking about is somebody who's going to lose the enhanced premium, doesn't qualify for the state premium assistance, and is trying to not pay a lot more. Might they want to move over or take a look at Cascade Care?
So yes. So anyone on our market, whether they qualify for federal tax credits or not, can purchase a Cascade Care Select plan or public option plan. So you were talking to Commissioner about cost containment, and one of the tools to contain costs is to set reference-based pricing. So the Cascade Care Select plans, on average, they're not always the lowest cost plan in a county, but often they are. They're having a lower rate of cost growth than other plans.
And do we know what that is on average?
I don't have that statistic right with me, but we'd be happy to get that to you. On average, those public option plans carriers are able to offer them at a lower rate because they live under a rate cap of 160% of the Medicare rates. So sometimes they may have a narrower network, but they're likely to be a lower cost, but not always.
Let's just step back and ask about longer-term stability here, because this doesn't seem like it's ideal for the insurance companies. I mean, they're coming every year to the insurance commissioner saying we need much higher rates. The consumers obviously being affected. It creates kind of uncertainty and maybe even some chaos during open enrollment. And as I noted with the commissioner, these enhanced premium subsidies were not meant to be permanent, or at least they didn't start out as permanent. So if that's not a long-term, even if they were renewed, even if this standoff in Congress ends and they're renewed for another year or two, what's the longer-term plan to build stability?
Sure. No, I appreciate you asking. One, I want to concur with you that 26 is very confusing and complex. And that from a customer-facing perspective, one of the more confusing things is gold plans for many people will be the highest value and lower cost option this year. So I just want to socialize that because it's counterintuitive.
Right.
And that's due to that premium alignment or silver loading policy. But the bigger picture that you're raising is the need for longer-term stability in our market. We are concerned about this. We feel that we have done everything in our power as our state-based exchange, governed by a bipartisan board with our state authorizing environment, to protect people as much as possible in 26. But what about beyond? So the things that we're concerned about are the additional provisions in the One Big Beautiful Bill, so-called act, that will make it continuously harder as more of those go into place to get and keep people covered by making it hard to do things like auto renewal.
And to be clear, now we're talking about this is on the Medicaid side.
That's actually on the marketplace side.
The marketplace side too.
That bill, of course, it included massive cuts to our Medicaid program, Washington Apple Health, but it also has major provisions in it that will harm the marketplace, so both. But in terms of subsidies, I want to note that across all our major health programs in our country are subsidized. So employer-based insurance is subsidized. Medicare is subsidized.
In the sense that your employer is paying a percentage, if not the majority of the
tax
premium.
advantage that they get and that they are able to pass on that value to employees tax-free.
So it's not that unusual for somebody when they go to buy health insurance to have some other party paying a portion of the premium.
So having a tax credit is a common tool that we use in our country to drive affordability for all matter of necessities and things that are not as necessary, but for food, for natural resources, et cetera. So what we know about this policy is that it's been incredibly effective in driving record high enrollment and keeping people covered. And keeping people covered keeps the system healthy and keeps prices down for everyone.
I know you always like to make a nod to how people can reach the Health Benefit Exchange. So
I do.
Remind us of the website.
Yeah. It's WashingtonHealthPlanFinder.org.
All written out.
Yes.
Okay. They can call too, I suppose.
Sorry, it's WA, HealthPlanFinder.org.
WA. Okay.
And the phone number we provided, I think you're going to do through a screen share.
Okay.
Yeah.
And the bottom line is people have until January
15th, and if they want coverage by January 1, they need to sign up by December 15th.
And there is help available if
Lots
people
of help
get online
available.
and say this doesn't
Call
make sense.
the call center. Yeah. It's many people just self-serve on our site because it's very user-friendly. Others want help from someone over the phone, or they can have an in-person assister.
And your message to legislators heading into this January austere legislative session, supplemental year?
Yeah.
Just briefly.
Well, again, our number one focus will be maintaining that commitment to the state premium assistance program, Cascade Care Savings, holding that steady through the end of the biennium and then through the full calendar or plan year 2027 as we work to implement additional harmful provisions from H.R. 1. We're also looking at ways to support our bipartisan exchange board who certify the plans that are available on our market so that we can be more effective in setting the market and preventing bare counties that you were speaking of before and ensuring statewide access to affordable plans.
Okay, got to stop you there. Ingrid Ulrey, the CEO of the Health Benefit Exchange, thanks for coming in.
Thank you.
Appreciate it.
Okay.
Thank you for watching Inside Olympia. We'll see you again next week.